Welcome back to Teshkid FX for another price prediction update, and in this video I'll be giving you a price prediction update on Quant, whose current price stands at the $114.9 mark, and here on TradingView the market is down by 2.05%. and in this video I want to give you the short-term and the long-term scenarios that I'm expecting to play out, basing my analysis on the Elliot structures, the Fibonacci's, and also the key areas of support and resistances, and allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the Quant chart. Quant from the all-time high had been seeing no prices in this massive ABC corrective structure, which took us back to around the $40.1 mark, and after seeing that low we have been seeing a very nice bounce to the upper side that is better seen here on the 4-hour chart, obeying the Elliot structures, having that with 5 taking us back to around the $229 mark. And in that movement we completed the formation of a higher Elliot wave count 1 to the upside, and after seeing the formation of a higher Elliot wave count 1, whatever we expect next is a bit of a movement to the lower side in the formation of a higher Elliot wave count 2, and I believe that is what has been in formation over here, and there are chances that we might have made our low in the formation of that high Elliot wave count 2 at around the $94.4 mark, and right now we might be in the formation of that higher Elliot wave count 3 to the upper side. And jumping to the 1-hour chart for further analysis, here on the 1-hour chart I'll be giving you the short-term scenarios that can play out, and also draw out any key chart patterns that we have information over here. And in the formation of a second wave, which is a corrective wave, we also expect to see an ABC corrective structure information within the formation of that wave too. And there are two ways I can have that ABC corrective structure, and that is what is going to give me my two possible short-term scenarios that could be playing out here on the Quant chart. And the first ABC corrective structure that we can have over here is having this as a wave A, then a wave B, then we continued pushing even low in the formation of that wave C, making our low at around the $94.4 mark. And if that is the case, that completed the formation of that higher Elliot wave count 2, and I'm expecting a bounce to the upside in the formation of this higher Elliot wave count 3, which is an impulsive wave, and because of its impulsive nature we also expect to see fractal waves in formation within that wave 3. And I had sketched out an Elliot wave structure over here, having this as the wave 1, then a wave 2, then I was expecting a wave 3 before we continue before we see a wave 4, and then continue pushing even higher in the formation of that wave 5. But you can see from this Elliot wave structure, in the formation of that wave 3 we are not seeing an impulsive movement to the upside, and that means there are chances that this is not an Elliot wave structure to the upside in the formation of that wave 3, because we are losing that impulsive nature in the formation of that wave 3, and I have to remove that Elliot wave structure from my charts. And that gives me the second possible scenario that can play out here on the Quant chart, and that I'll be basing it on the ABC corrective structure. And that means I have a different ABC corrective count over here, and that ABC corrective structure we can have it having this as a massive wave A, then I'm expecting a bit of a bounce to the upside in the formation of that wave B before we continue pushing even low in the formation of that wave C to fully maximize the formation of that higher Elliot wave count 2. And this second possible scenario means that Quant has not yet made the low in the formation of that higher Elliot wave count 2, and there is still more downside potential here on the Quant chart. And getting a little bit into the formation of this ABC corrective structure, we can first sketch out a minimum target area to the upside in the formation of this wave B using the Fibonacci's, connecting it from the low of from the high of that wave A to the low of the wave A. And that gives me a minimum retracement area to the upside in the formation of that wave B between the fib level 0.618 and the fib level 0.5, which perfectly lies between the $177.6 mark and the $161.7 mark. And that is the minimum I can expect that movement to the upside in the formation of that wave B to do. And we can also extend the target area to the fib level 0.382. So now my target area lies between the $177.6 mark and the $145.8 mark, and that is the minimum that I'm expecting that wave B to the upside to do. But there are still chances that we can see a straight sell-off over here in the formation of this wave C. It's not a must that we fully maximize the formation of that wave B, then continue pushing low in the formation of that wave C. And to support that movement to the lower side in the formation of that wave C, over here I have a chart pattern that is in formation, which is a head and shoulders pattern. And if I draw it out, we can have these as the left shoulder of that head and shoulders pattern. Then we have seen the head, then the neckline, then we have seen the right shoulder, and we are seeing a bit of a push to the lower side in what might be giving us a breakout out of this inverse head and shoulders pattern. And from this structure you can see it's not the perfect head and shoulders pattern that we can expect from the books, but it's still a head and shoulders pattern, and the minimum target area of the breakout is the height of that is the height between the head and the neckline, and I can get that height and then place it below the neckline, and that gives me a minimum target area back to around the $92.7 mark, and that fully supports the movement that I'm expecting in this massive ABC corrective structure over here of not fully maximizing the formation of that with B and see a straight sell-off in the formation of that with C, to give us a new low here on the Quant chart. And once that plays out, then we can expect an impulsive movement to the upside in the formation of that with 3. So those are my two possible scenarios that I'm expecting to play out here on the Quant chart, and also taking a look at the indicators to see what movements will be supported on the RSI. On the RSI we are trading at around the 29 mark, meaning we have massive room for us to support any movements to the upside and a bit of room for us to support movements to the lower side before we get fully into the oversold region. Also taking a look at the MACD, here on the MACD we have printed a bearish cross, and that would mean no prices are coming our way, and there are chances of seeing a breakout out of these in head and shoulders pattern and see a straight sell-off in the formation of that with C to give us a new low in the formation of that high Elliot wave count 2. So let's be patient and see how that plays out, and also continue watching those key areas of support at around the $110 mark and also the $100 mark, and I'll keep you updated on any movement that plays out.